Brad Williams, Frugal Finance. Let's talk about spinoffs, and the most recognized would be GE, where GE split up or sold off. At one point, I think they had 16 different companies under their umbrella, and they sold off the majority of them, or they spun off. They sold off a bunch, and then they spun off a few. So now you have GE. You have 4 different divisions. You have their energy, you have their medical, you have GE as a whole, and I think there's 3 or 4 different. All right. DuPont did the same thing. Well, let's just go in. Let me just explain what spinoffs are. Well, let me just give you an overview. Let's say you have a GE. It was a huge conglomerate. They had 16 companies. They just weren't performing. Well, the question is, how do you decide what to do about that? Well, you want to look at the overall return on capital of a company. If a company is not earning a return on capital above their cost of capital, that's problematic. Now, you as the manager, CEO, have to determine if it makes sense, if there's more value trying to chop the company up, sell part of it off, spin it off, or come up with a way to fix things. And GE elected to sell off, as I said, about half the company. Then they spun a bunch off. Why would they spin it off? Well, from tobacco producers to payment services and more, some major businesses have been spun off from their previous corporate owners. Why do corporations spin off subsidiaries? And what does this mean for investors? What is a spinoff? A spinoff occurs when a corporation divests itself of one or multiple divisions. The parent company often keeps a large ownership stake in the spinoff, but the new entity is an independent corporation with its own officers and board of directors, and its shares trade separately from those of the parent. A spinoff is different than a corporation selling a subsidiary to another company. Shares in the new spinoff are allocated to existing shareholders of the parent company based on a predetermined exchange rate. Why pursue a spinoff? A company's management might recommend a spinoff if they expect the combined value of the entity separately would be greater than if they continue to operate as a single company. In this case, they're anticipating that the whole is currently valued less than the sum of its parts would be. Here are some situations where executives might believe spinoff makes sense: management, expertise, or focus. While executives of a company might be well suited to overseeing most of its lines of business, perhaps there's a subsidiary that doesn't quite match their expertise. Or maybe a specific unit requires more attention than it's getting from upper management, and its performance is suffering as a result. In either case, spinning off the unit, putting it under new management with responsibilities only for this outfit, might result in better performance at the newly independent company. Meanwhile, parent company's managers could put their focus on the firm's remaining enterprises. Separating growth trajectories and strategy. A mature company's division that's growing slowly, albeit steadily, might prove a drag on a sister's unit that's experiencing robust growth. Disparate operations like these could benefit from separating management that would tailor strategies to their different stages and goals. And separating them could enhance interest from investors who specifically seek out opportunities that are now better reflected by either the new entity or slimmed down payments. Enhanced coverage from security analysts. The same factors that help management improve its focus can impact securities analysts as well. It can be easier to assess the prospects and earnings of a more focused, less complex business. In addition, after a corporation narrows its focus, it might attract new coverage from analysts who specialize in that niche. Unlocking shareholder value, perhaps the biggest factor driving spinoffs, is the idea that parent company is undervalued, maybe because of management or strategy issues described above, and that its value would increase if it spun off one or more business units. Well, let me back up here and let's state companies that acquire other companies tend to be a disaster. About 65% of them end up in failure. Acquisitions. Never do acquisition unless you're doing a roll-up. Get into roll-ups later. So what happens is you get a company like a GE that initially it looks good, but 4 or 5 years later, it turns into junk for whatever reason, the acquisition never panned out. Well, yeah, a company's going to go in and they're saying synergies. Well, the synergies never exist. The merge never exists. The personalities don't mix. So you have a lot of moving parts in the background, and in the end, there's just no cohesion. And that's what starts the snowball effect. And then it turns into an avalanche, and next thing you know, the companies start offloading these things or spinning them off. And spinoffs generally are junk. All right. I haven't had much success in the spinoffs from a number of long-term investments I've had. So then in general, I kind of poo-poo the idea of these spinoffs. But on the other hand, would the parent company as a whole perform better over the same period of time without the spinoffs? I don't have that answer, but let's move on. What does a spinoff mean for investors? In a spinoff, a parent company typically distributes shares in the new company to current parent company shareholders on a pro rata basis. Meaning the number of shares you hold in the parent company determines the number of shares you'll receive in the new company. Let's say it's ABC Company, they have a DCF, they're going to split off another company, you're going to get a third of a share, that's all it's worth of that particular company. And then that one share of the parent company will be sliced to 66%, and then you're going to get 1/3 on that spinoff. Immediately after the spinoff, each parent company shareholders own shares in the new company as well as the parent. Once the new company begins trading, the parent company shares price is adjusted lower to reflect the fact that its valuation no longer includes the spinoff unit. After the separation, the combined market value of the companies might trade close to the pre-spinoff value of the parent company, but since they trade independently, this isn't necessarily the case. Spinoffs can impact share price even before the deal is executed. When a spinoff is first announced, the parent company's share price might rise. The news of the transaction is greeted with enthusiasm. But investors have their doubts about the wisdom of a spinoff. The parent company shares might fall. In addition, both parent companies and spinoffs can face significant challenges during and after a spinoff deal, ranging from how to deal with employment contracts and pensions for a soon-to-be divided labor force to determine how to handle once shared services such as human resources and information technology. Then this transaction can prove smoother for subsidiaries that have already enjoyed a good deal of autonomy in their operations prior to their spinoff. Once a spinoff occurs, affected investors can choose whether to hold or sell shares of the parent company in the new company. Consider your investment goals and risk profile, as well as any opinion you might have about whether the spinoff is beneficial when making these decisions. What are the tax implications of spinoffs? Spinoffs are usually tax-free transactions for shareholders. The company is essentially breaking itself into smaller pieces while maintaining the same ownership. But you must plan for the possibility of capital gain taxes if you choose to sell shares of either the parent or the new entity after the spinoff. Talk to a tax investment professional about how a spinoff could impact you. Comment. Let me know if you've gone down this route, if you've been successful. Have you been proactive and you found spinoffs favorable and you invest in them? Or do you just say taboo, they're bad, I'll stay away from spinoffs? Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.